Telephone data systems dividend yield has spiked to over 9%, growing more than 200% over the past 2 years. A 4-year slide in share price has created a massive opportunity for dividend investors to buy into an amazing dividend aristocrat at rock bottom prices, but a closer look may show us why the stock has been selling off so much. In this video, we're going to take a deep dive into TDS and analyze their dividend, financial growth, and see if this stock belongs in your retirement portfolio. So first off, TDS is a telecommunication services company. They provide products to customers and businesses across the United States through their portfolio of companies. This is straight from their website. We can see that they have 4 subsidiary companies. The first and largest is US Cellular, and they're basically just a wireless carrier company. They provide national network coverage and industry-leading innovations designed to help customers stay connected to the things that matter most. Isn't that nice? Their second largest company is TDS Telecommunications. They basically provide internet, TV entertainment, and phone services to rural and suburban communities throughout the United States with 1.2 million different accounts. One Neck IT Solutions provides hybrid IT solutions to cloud, such as cloud and hosting solutions, managed services, enterprise application management, advanced IT services, blah, 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 on and on and on. And their smallest company is Subtle Strauss, and they're basically a printing company similar to Kinko's. If you remember Kinko's, they provide similar services. So you can see that TDS is not just a cellular company like Verizon or T-Mobile or anything like that. They actually provide a wide range of different products through their subsidiary businesses. So they're pretty diversified, but still inside that kind of communications technology column. So if we take a look at their share price over the past, let's see, since 2007, we can see that for the most part, since about 2008, obviously the financial crisis in 2008 caused TDS to see a huge decline in share price, down from, let's see, about $70 in 2007, mid-2007, to a low of $28 in late 2008. And then from that point till about 2019, they traded more or less sideways, swinging up and down, but staying kind of in this band between $20 and $40. And then recently, since 2019, they've been on a slide and have recently been trading around $7. And this is obviously a 15-year low. I'm not sure what the share price action was prior to 2007. Stock River doesn't have access to that data, or at least won't display it, but this is a multi-decade low that we're looking at. And as a result, we've seen this massive spike in the yield. If we go down here, and if you look at this bottom chart here, we can actually take a look at the dividend yield and the payout ratios across time. Down here in 2011, we're looking at yields around 1.28%, hovering around 2.5%, but typically we're not seeing yields above 2.5 or 3%. And just recently, now that the share price has dropped so much, we're seeing yields near 10%, 9%, and currently the dividend yield is sitting at 9.64%, and this is on NASDAQ.com. And that's with an annual dividend of 74 cents per share. So you might think, well, maybe they've spiked their dividend, and that's what's causing the increase in yield along with the decrease in share price. Maybe they're trying to catch people in a yield trap, but that is actually not the case. If we take a look at TDS's dividend history, we can see here their ex-dividend date in Q1 was March 14th. They're paying a dividend of 18 cents per share. And then the year before that, 17 cents per share, 16 cents, 15 cents, 14, and on and on and on down the list. And down here, this is on TDS's website, we can see that Telephone and Data Systems began issuing a quarterly dividend in 1974, and the dividend price has increased on an annual basis since 1975. So I've actually found this company through the Dividend Radar spreadsheet, and from that spreadsheet we saw that the dividend was increasing, or has been increasing, for 49 years. And that's consistent with what they're saying here on their website. They've been increasing their dividends since 1975. So they're very, very close to Dividend King status. They have the volume, they have the market capitalization, and really they're just missing that increased streak. So here very soon we should be seeing them on the Dividend King list. So that's all fine and good. We've been seeing an increasing dividend and their yield is very, very attractive, but what about the safety of the dividend? And this is where things get a little bit interesting. So here I ran my script to find the payout ratios on net income, operating cash flow, and free cash flow on an annual basis. And here at the end of the year 2022, we can see that the payout ratio on net income was very high, around 243.5%. And operating cash flow around 13%. And then free cash flow, they actually had negative cash flow in 2022, so their payout ratio is negative. And similarly, for 2021, they had negative free cash flow, so we're looking at a negative free cash flow payout ratio. And obviously, this 243.5%, or I guess 0.6% if we're going to round up, that payout ratio is very concerning. And we can see that the payout ratio on net income started to increase in 2021, but in 2020, 2019, and in 2018, we actually saw some very safe payout ratios on net income. Now, you know that I don't really like payout ratios on net income because net income can be manipulated with, depreciation actually reporting earnings, and cash flow is a little bit more of a real measure of the income of a business. This is actually sales and then the expenses of the company. It's a more accurate representation of the actual money coming in and out of the business. So when I'm looking at the operating cash flow payout ratios, I'm looking at these numbers here, and we're seeing payout ratios that are very, very safe. 2018, we're looking at a 7% payout ratio. 2019, 7.38, 5% in 2020, a little less than 11% in 2021, and then 13% in 2022. These are well below my threshold, which is about 75%. And similarly for free cash flow, actually, now that I'm really looking at it, we're seeing a 127% free cash flow payout ratio in 2019. And really, it's just in 2018 and 2020 that we're seeing an attractive free cash flow payout ratio. So that's something to kind of think about if you're worried about the safety of the dividend. Given the fact that TDS has been increasing their dividend for 49 consecutive years, they have a lot riding on continuing to increase that dividend and not cutting it. They're put it straight on their website that they've been increasing their dividend since 1975. They're very proud of it, and that indicates to me that they value distributions to shareholders very, very highly. So, if they continue on with this high payout ratio on net income, then obviously they're going to have to cut their dividend at some point. If these free cash flow payout ratios don't come down, say back to where they were in 2020 or 2018, then they're going to have to cut their dividend. The operating cash flow payout ratios, on the other hand, indicate a very, very safe dividend. So that's just something to think about. Now, if we look at the financial growth of TDS, these numbers are much more attractive. So here we're looking at net income growing at 3.7%, free cash flow at nearly 11.25%, operating income at almost 18.5%, cash flow, this is operating cash flow, at almost 10.5%, and let's see, diluted continuous operations, which is a conservative estimate of earnings, declining actually at almost negative 2.76%. That's not very good. We want to see some positive earnings, but almost double-digit growth across the board, excluding this diluted continuous operations. Now, net income is not in the double-digit range, but still 3.7% is above historical inflation, so we're seeing good growth on net income. And down here we can see that their dividend per share over the past 10 years has been growing at about 3.8%. Now, this is a trend line growth. If we take a look over at Digrin.com, we can see that their 10-year growth rate is about 4.5%, 5-year growth is 3.3%, and then their 3-year growth is a little more than 3%. So it seems like they're starting to pump the brakes on the dividend growth. But if you take a look at the chart, it seems more or less steady. And, a range of what, 1.63% over the past 10 years, that's pretty steady in my book. So I think we can continue to see pretty strong growth in the dividend. As far as the actual dollar amount is concerned, obviously the yield is kind of all over the place with the price action that we've seen over the past couple years, but I'm not super worried about the safety of the dividend. Their financial growth is pretty strong across all metrics, saving this diluted continuous operations number, and I'm pretty optimistic about the future outlook of TDS. So now that we've taken a look at the price history, the current yield, the dividend history, and the payout ratios, and taking a quick look at their financial growth, let's see what kind of money we can actually make if we invest in TDS. So here we're looking at marketbeat.com, their dividend calculator, and we're estimating if we invest 100 shares, or if we buy 100 shares of TDS at their current share price, which is about $7.58. And here we've made a couple of assumptions. We're looking at their 9.64 initial annual dividend yield. This is from NASDAQ.com. Their expected annual dividend increase, and this is from the trendline growth that I calculated earlier. And their share price we're assuming that it's going to grow from here. So I'm assuming a 3% annual share price appreciation, and I think this is reasonable because between 2008 and 2019, we traded more or less sideways, right? And we found a happy medium here between $20 and $40, or about 36, I think. Yeah, 37. And now we're down here at a near all-time low of $7.58. So what I hope happens is that we eventually see this share price climb back up to this $20 to $40 range over the next 10 to 20 years. And a 3% share price appreciation over that time period will definitely get us there. So we have our distribution frequency as quarterly, drip investing's on, dividend tax rate at 15%. So let's see what we're looking at. Our yield on cost is 102.68%, and that means our annual dividend income is $885.81, and that's based on a $758 initial investment, right? 100 shares times $7.58, which gives us a total dividend payment over 20 years of $5,823.54, and an average annual return of $12.18. So we're seeing a lower share price appreciation than the S&P 500 historically, but through dividend reinvesting, we're getting an annual return, an average annual return of more than 50% of the S&P 500 average. So that's pretty good. One thing to note, the dividend X date for TDS is today. So typically when an X date happens, that's the last day that you have to buy the dividend stock prior to the X date in order to actually receive the dividend. So typically on the X date, a lot of people who are trying to capture the dividend will sell off, and you might see a drop in share price of TDS as a result. So actually this 9.64% annual dividend yield could increase if we see the share price drop below this $7.58 mark, which is what it closed at yesterday on June 13th. So that's it for this one. I hope you guys enjoyed this video. There's a lot more that we didn't cover on telephone data systems, so I'll drop these links that I used for my research in the comment section, or not in the comment section, in the description below, and you can do your own research, determine whether or not TDS belongs in your portfolio. But until next time, guys, stay safe and take it easy.